Hey, this is Chi from WX Capital. Welcome back to our weekly roundup. Today we're going to talk about why the S&P 500 dropped about 3% last week. A lot of it was due to rising COVID cases. But is this truly a concern? Let's dive in. Before we dive into COVID concerns, we're going to talk a little bit about the Federal Reserve and their stress test this week. So on Thursday, the Feds announced that they're going to enforce that big banks are going to pause dividend payouts as well as suspend share buybacks. A lot of this is around the concern for capitalization. They want to make sure that these banks have enough capital to ride out the COVID crisis in the worst case scenario. Investors saw this as a negative because they see the Feds potentially preparing for a really bad downturn. However, in February, the Feds did the same stress test and found that the banks were well capitalized. So this move by the Feds is more of a precaution rather than preparation for the worst. However, markets did drop on that news, but this is more of a short-term drop, and we don't believe that this news is going to impact future market recovery. Secondly, we saw a huge rise in COVID cases this past week in the US. A lot of this has been concentrated in southern states. States like Texas, Florida, and Arizona have actually paused reopening because they saw spikes in COVID cases and hospitalizations. Now, this is a concern to many investors because they're worried that other states are going to take the same precautions and slow down reopening. However, this may not be a valid concern given that we saw states like New York, Massachusetts that still have declining COVID cases. So this is more of a localized concern as of now, and it will not likely have a significant impact on the markets unless a few things happen, such as an increase in hospitalization rates overall in the US, an increase in COVID-related deaths, as well as other states taking precautions and delaying reopenings or pausing them altogether. While the overall rise in COVID cases is concerning, something we need to keep in mind is that overall US hospitalizations and deaths related to COVID have been on the decline. Why is that? The reason is the average age of the patients getting infected with COVID has dropped greatly from 50 to 33. Which means that there's a less vulnerable population getting infected now. These patients are much less likely to become hospitalized or die from COVID. However, there is a concern that we have a much larger asymptomatic population roaming around the US now, especially with 4th of July coming and people going back home to see family and friends. This asymptomatic population could potentially impact those that are more vulnerable, the elderly population or those with comorbidities. So this is something that we need to keep an eye on, death rates and hospitalization rates in the US. If there is a spike in those two metrics in the US, then there is definitely concern, but as of now, overall death rates and hospitalizations have been on the decline, which is a positive sign for the US. The final thing that happened this week was a report that was announced that consumer spending spiked a record of 8.2% in May. Now, this is definitely tied to state reopenings and the fact that there was a lot of pent-up demand and Americans are now consuming a lot more now that they're able to go to restaurants, hotels, and beaches, etc. So this is a very positive indicator for economic recovery because it shows that there is consumer confidence still in the US and that people are willing to spend their additional capital on goods and services. So overall, WX Capital is still confident in market recovery. However, there's going to be 1 to 2 months of uncertainty and volatility left in the market as people are now engaging with the economy and visiting friends and family for big events like Memorial Day weekend as well as 4th of July. So there may be a uptick in cases as well as hospitalizations and deaths, but hopefully a lot of that is mitigated through early detection of COVID cases with new treatment options available, such as the generic steroids that have been found to reduce the death rate of severe COVID patients, as well as proper social precautions around spreading COVID. So generally, if we can make sure that these things are aligned and that there's no spike in overall hospitalization and death rates, then there should be a gradual market recovery in at least 1 to 2 months. If you guys liked our video, don't forget to like, comment, and subscribe. Also check out our website at www.wx.capital. We have a great subscription service that allows you to get real-time trades as well as market commentary, so you know exactly what's going on with stocks and you know exactly what we're trading and what the next hot stock pick is. See you guys around.